Mr. Krishnan, morning, Shesha this side, and thank you so much for taking your time out and joining us here on ET Now. We'll talk about different parameters in just a bit, but first up, let's talk about the strong numbers that you've reported for the quarter gone by. On a year-on-year basis, they look very strong. Sequentially, however, consolidated numbers look a little soft. What really transpired in the quarter gone by? If you can take us through your assessment of how the quarter looked like for you.
Thank you, Ashisha, and thanks for having me. I think we've had a pretty good quarter, I would say. We have essentially two business verticals. One is the ratings vertical. The other one is what we have now recently rechristened as risk and analytics vertical. Both these verticals have actually delivered reasonable growth. The ratings revenues grew by roughly about 13% in the first quarter as compared to the first quarter of last year. And this has been largely supported by substantial expansion in bank credit, actually. Bank credit grew by about just a little south of 19% in the first quarter of this financial year. It would have been better in case, the bond market activity also was sharper as well. But unfortunately, given the fact that the yields were actually elevated, the bond market activity was slightly muted. On the risk and analytics side, we saw revenue growth of almost about 58%. But having said that, one has to bear in mind the fact that this is also a consequence of the acquisition of Fintelix that we did close to October of 2025. So those numbers wouldn't be there in the first quarter of last year. So the growth is actually quite significant thanks to consolidation of the Fintelix numbers, in the first quarter of this year's, numbers as well. But even if one were to keep that aside, we have seen growth of upwards of 20%, pretty much all our verticals within the risk and analytics space. So encouraging first quarter, but we still have 3 more quarters ahead of us. So hopefully we will land in a good place, by the end of the year.
Okay, so it was an encouraging first quarter, and of course you have 3 other quarters to go for the rest of this year. You were talking about the acquisition and the fact that risk and analytics segment reported 59% growth, partly because of the Fintelix acquisition that we did, which was not there in the base year. But how much was this segment growth, excluding this acquisition, the risk and analytics segment that we are talking about?
Roughly about 20-odd%.
Okay, so 21% growth in risk and analytics segment, excluding the Fintelix acquisition. And how is this acquisition really helping you? What is the benefit that you are generating out of this?
See, our philosophy, whenever we look at inorganic growth opportunities, has been largely, predicated on a couple of things. One, of course, the most important thing is for us to look at opportunities that are synergistic with what we do. We understand risk. And therefore, whatever we look at as an opportunity to pursue will have to be synergistic, with that, domain. So we made 2 acquisitions in the last, 2.5, 3 years. We acquired a company called E2K Technologies, probably about 2.5 years ago. Again, they're in the risk, space, targeted at the BFSI segment. Fintelix is in the risk space, as well as they have a very large, regulatory reporting platform as well, again targeted at the BFSI space. So our entire risk and analytics vertical is, if I keep aside what we call, no-tech vertical, where we do BPO, kind of a GCC kind of a business. If I keep that aside, the rest of it is all completely risk aligned, and the rest of it is entirely, targeted at the BFSI segment. So we look at acquisitions that we believe are bringing adjacencies for us in terms of products, in terms of technology, and market reach. So that's what actually interested us in Fintelix, and that's what led us to actually pursue that acquisition, and then thankfully conclude that as well.
Okay, and while we are talking about acquisitions, and you also told us that you have done 2 acquisitions in the last 2 years, and you continue to grow both organically as well as inorganically. Part 1 of the question, what will the organic growth look like over the next few years? And part 2, any other inorganic acquisition that is in the pipeline or on the anvil for you?
Yeah, the organic growth, at the present time, I think the road ahead is actually, there will be, naturally, as one can expect, there will be bumps, as you go down the road. But we are fairly optimistic, of the future, both for the ratings business and for the risk and analytics business. Inorganic growth opportunities, see, we will always remain, opportunistic, right? So we will keep our eyes and ears open. And then, as I said, in case we see something that is synergistic to what we do, we are confident that it's likely to bring in adjacencies to us that we, stuff that we don't have, to sort of address any deficiencies that we might have in our product portfolio or technology portfolio, et cetera, et cetera. So we will always be interested in actually looking at opportunities. So we don't have anything, on the cards, but we will continue to be opportunistic.
Okay, let's also talk about any impact of geopolitical turmoil that you're facing, because at the end of last quarter, you did tell your investor that there has been some impact. If there was impact, is the worst behind us, and have operations started normalizing now?
It's it hasn't impacted us, heavily. See, if I look at the geopolitical landscape, a significant part of this impact we expect to see, on the rating side of the business, because what it could lead to is corporates becoming a little less sanguine about prospects. Therefore, they may not necessarily pursue expansion, projects vigorously. They may not want to actually pursue significant, capital expenditure programs. As a result of all of that, it could result in lower, borrowings as far as, corporates are concerned. The minute actually borrowings actually drop, naturally it affects the ratings industry in general, and naturally it'll affect us as well. Thus far, thankfully, it hasn't yet, played out. Whether we believe that it has, completely settled and it's behind us, I think it will be probably too early to tell. There is less noise at the present time, and we're hoping that actually things will settle, sooner than later.
Okay, Mr. Krishnan, also wanted you to talk about the healthy cash balance that you're sitting with. About 700 crores was the cash position at the end of the last quarter. What is the position now, and what is the utilization strategy looking like? I do understand that you told us that you continue to remain opportunistic, and perhaps the money will be utilized for acquisitions. But as of now, what is the utilization strategy?
So we revisit this both internally at a management level and with the board, very, very often. Our cash position, our deployment strategy, et cetera, et cetera. So there are, if you, go back, let's say, to the financial year that ended in March 26, and prior to that, we periodically keep upping our dividends as well, either in the form of interim dividends or a special dividend, which is what we did, for the last financial year as well. There is a 35 rupee dividend per share, which has been given as special dividend, also consistent with the fact that we have completed, 35 years, in this business. So we keep revisiting our cash position and deployment strategy very often internally and in consultation with the board. Inorganic growth opportunities, obviously, as I said, we will continue to keep our, eyes and ears open. And then if there are opportunities that are interesting, we will actually pursue them as well. So it's something that gets our attention, continuously, and something that we are mindful of both from our own, deployment strategy standpoint and from the point of view of, stakeholders as well.
Are you ruling out possibility of any big buyback or dividend payout in the near future?
It won't be appropriate for me to comment on that.
All right. Mr. Krishnan, thank you so much for taking your time out and joining us here on ET Now and sharing your thoughts on what the future could look like for the company. Thank you, and we look forward to interacting with you more often on ET Now. But on that note, we need to slip into a very short break. We'll touch base with the management of Hexaware Technologies on the other side. Stay tuned.